Hi guys and welcome back. There's been a lot of talk about Tesla going bankrupt. It has been like that all through the company's history, but in the last few months it has escalated rapidly, making Tesla now the most shorted stock in the US market. The media hype against Tesla is worse than anything I have ever seen on any other company I follow. People with a negative view on the stock often claim that Tesla's business model is unsustainable. They argue that Tesla is losing money on every car they make and burning through cash fast. While there are definitely ways to reach these conclusions through Tesla's financial statements, this video is about why I feel confident this is nowhere near the case, and that Tesla's business model is more sound than ever. Let me start out with a simple analogy explaining Tesla's business model in terms we're all familiar with. Housing. So let's say I'm looking to get into the real estate business, and I buy a new apartment with the intent of renting it out and making a profit. Let's assume it's a 2-bedroom apartment, and to maximize profit, I plan on renting out each bedroom separately with the rest of the rooms as a common area for tenants. I know the demand is strong for my apartment, because even before it's ready, people are lining up and putting down deposits. Initially, the massive loan increase and refurbishment, the mortgage payments, as well as janitor, light, heating and other costs will make it look like a horrible investment from an accounting standpoint. Even as I get my first tenant, I might not break even, and critics, citing historical numbers, willing to ignore my overcapacity, could easily call my business model unsustainable. Now let's say I have huge ambitions to be a big player in real estate, and before I get my second room ready for a tenant, I buy 2 other whole new apartments for rental. Now the critics are even more convinced. It seems obvious that even though my revenue is rising, my margin is falling and cash burn is increasing much faster. In reality, however, I'm capitalizing on the enormous demand, creating the infrastructure for strong future growth. This is exactly what we're seeing with Tesla. Depreciation of capital investments and operating costs are on an infrastructure designed for 500 to 600,000 vehicles a year, with Tesla producing less than 35,000 last quarter. This hurts gross margin tremendously during the ramp up, and it is something we see every time Tesla starts production of a new vehicle. It is quite clear on this chart that Tesla's gross margin takes a hit every time they start ramping up a new vehicle. Now, a lot of factors affect gross margin, including Tesla's energy business and costs related to the other production vehicles. So probably the most clear example of how a ramp up affects gross margin is seen during the Model S ramp. Here the margin fell to negative 17% before rebounding and stabilizing between 25 to 30% a few quarters later. The story will be no different on the Model 3. Right now, Model 3 is a money drain with a negative margin of around 80%. Instead of making Tesla money, it is sucking out an estimated $360 million last quarter alone. But as production eventually ramps up, new cost per car will decrease and gross margin will increase significantly. So when we look at Tesla's cash burn, the drain from the negative Model 3 margin almost completely consumes the cash burn from operating activities. But the company is still burning through billions in investments and is projecting to spend another $2.3 billion this year. Tesla will need some serious cash flow soon. And the answer is, of course, to scale Model 3 production. Musk has claimed a sustainable level of 6,000 Model 3 cars per week this year. This may or may not happen, but they do seem close to reaching 5,000 car peak production, so I will assume 5,500 sustainable in Q4 is realistic. Looking at the numbers, I believe Elon will have to struggle to be cash flow positive in Q3, but in Q4, Tesla should easily be cash flow positive, as well as profitable. The real treat comes when looking at 2019 projections. Should they reach as little as 8,000 Model 3s a week on average in 2019, which I think is conservative, I believe they could be very profitable and cash flow positive to the tune of about $1 billion. Elon could of course choose to let that money go to investments. And although I already calculated $3.5 billion for capex in 2019, Tesla has many projects on the roadmap that could be brought to market faster with more cash. Personally, I think that's exactly what he'll do. To be honest, I feel a lot more concerned about Tesla not expanding rapidly enough than them going bankrupt. Not because I think they won't do great if they slow down, but I want them to absolutely crush the competition, like Apple did 10 years ago and Amazon is doing now, and that takes a lot of capital. So, what do you guys think will happen to Tesla? Will they go bankrupt or will they lead the future of transportation? Please let me know in the comments below. That's all for now. If you liked the video, please give it a thumbs up and subscribe to my channel for more tech, finance and Tesla related content. I'm Peter and this was TechAnalyst.